Your FICO Small Business Score. What you should know. The FICO SBSS score is a measure of your small business's creditworthiness. This score is becoming very popular with lenders. This score has also become widely used by SBA to qualify business loans. It's based on both your personal and your business credit history, not just your business as the main business scores do now. From FICO. FICO Small Business Scoring Service, or SBSS, is recognized as the industry leader in assessing the risk of U.S. small business credit applicants. SBSS is delivered via our liquid credit infrastructure and brings the speed of consumer lending to your small business lending decisions. With SBSS, you can make decisions in hours, not days, improving customer satisfaction and helping you attract more small businesses. This service helps you say yes to the right applicants faster and build a healthy portfolio of commercial accounts. The SBSS was actually launched all the way back in 1993. Since SBA started using it to evaluate all 7A loans under $350,000 in 2014, it's now become even more popular. And since Creditera now offers you access to this score, it's gotten even more notoriety. How the SBSS score is created. The FICO Small Business Score is requested, produced, and delivered in a 5-step process. First, application information is gathered. Then that data is passed to FICO Liquid Credit Decision Engine. Consumer and Business Bureau info is then gathered for that applicant. The data is then run through the SBSS model and a score is generated. The score, reason codes, and all credit details are then returned. Here is an infographic of the 5-step process. Lenders are already denying applicants due to low SBSS scores. As this score grows in popularity, it becomes even more essential you know as much as possible about it, so you can control it and your business's financial future. This score is also now the main score looked at by SBA to determine loan approval, especially for their most popular 7A loans. Scores reflect the likelihood of the applicant paying their bills timely. Scores range from 0 to 300. Higher scores mean lower risk, so the higher score you have, the better. Personal and business credit history as well as financial data are used for the total score calculation. As of 2014, all SBA 7A loans must go through a business credit score pre-screen. For SBA loans, you won't be approved with a score below 140, but they typically set the cutoff as high as 160. Below that, you'll probably be denied because of being too high a risk. Actually, chances are good the SBA lender won't even submit your application to SBA if your score doesn't meet this threshold. Many factors are taken into account to calculate the FICO SBSS score. Some include the owner or co-owner's personal credit information, business credit history, age of business, years in business, financial data including assets. Other factors included in the score are cash flow, revenue, the last 12 months of paydex scores from D&B, liens, judgments, any other known financial data. Take a really detailed look at the D&B data elements that are necessary to generate the SBSS score from D&B. As you can see, there are more than 60 factors that D&B alone supplies to FICO that are used in the score calculation. Each of the consumer and business reporting agencies also produce similar amounts of data and supply that information to FICO to also be used in the score calculation. If you have no business credit history and limited time in business, the highest possible FICO SBSS score you can get is 140. But even to get that high of a score, you'd have to have pristine personal credit if no business credit is established. SBSS also offers specific market-specific models for enhanced decision-making. One model is an agricultural lending and leasing model, which will impact you if your credit is being used for an agricultural loan or if you are signing a lease. Another model is used, specifically in Canada. And the SBSS Score Insights provides support for D&B's Small Business Risk Insight and the Small Business Financial Exchange. SBSS models are validated for term loans, lines of credit, and commercial cards all the way up to $1 million. This helps credit issuers making evaluations for larger transactions. If you are applying for bank financing of $1 million or below, chances are good that your SBSS score is being evaluated. SBSS gives small business credit issuers different combinations of data to evaluate the risk of a business. For example, a credit issuer can choose to only evaluate the application data of the principal owner, or they can choose to also include data from one or more of the business bureaus, or they can choose to weight one aspect higher than another. This is a highly intelligent score because it automatically goes from one business bureau to another in whatever order or priority the credit issuer chooses to generate a score. So if a lender prefers the D&B Paydex score as the default, the SBSS pulls that data set. If there isn't enough info to generate a score, it then automatically checks another business score, such as the Experian IntelliScore, or it can even move on to the Equifax commercial data. If there isn't any or not enough Business Bureau data reporting, the SBSS will then just use the personal data of the business owner along with known or supplied financial data. Due to the way data is combined, the SBSS has become popular for credit issuers to now assess lending for startup businesses, which has been hard in the past. The SBSS Credit Offer Index is designed to help credit issuers know what amount to lend or the capacity of the applicant. It's a benchmark against what businesses of similar profiles have requested in the past. The SBSS Credit Offer Index is comprised of application data, known financial info, Consumer Credit Bureau data, and Business Bureau data. It returns a percentile ranking of the current request versus other small businesses of similar, provides as well as the amount of money requested from those businesses. This can be used whether financial data was supplied as part of the application process or even if it wasn't. This can be used by credit issuers to see if the amount being requested is in line with industry experiences for that type of small business. The SBSS score has been updated recently from its original version. Check out some of the differences. The newest version accesses records for accounts now up to $1 million. It also takes into account a lot more data as more institutions are submitting data for score calculation. And this newer model also works really well for startup businesses, much better than the prior version. The new FICO SBSS 7.0 model is powered by some reporting agencies such as Equifax and SBFE data. Predicts bankruptcy, charge-offs, or 3+ cycles delinquent over a 24-month period. Most recent SBSS model. A lot of lending institutions and organizations now use SBSS. Institutions now using the SBSS score include KeyBank, Huntington National Bank, PNC, RBC, U.S. Bank, Zions Bank, HSBC, Santander Bank, even SBA. There are several things you can do to ensure you have a high FICO small business score. Ensure you have a business credit profile established and that you are paying your business obligations on time. Business credit is the easiest to control, so this step is the fastest and easiest way to control your SBSS. You also should work on repairing any damage to your consumer report and load it up with good credit accounts to offset any bad. Report good financial data such as revenues and profits. And remember, the longer time you are in business, the higher your score will be. Contact us today to learn more about your FICO small business